Budget 2021 was passed by the Dewan Rakyat following what was, by all accounts, a fairly heated and contentious session in Parliament today. During Finance Minister Tengku Datuk Sri Zafrul Tunku Abdul Aziz's wrapping up speech, ruling and opposition MPs furiously interjected for clarifications on certain issues, including the expansion of the Employees Provident Fund's ICNA facility to include those receiving pay cuts. Subang MP Wong Chen claimed that the EPF's inflows amounted to no more than 20 billion ringgit per year and therefore could not cover the total increased allocation of 70 billion. However, Tengku Zafrul clarified that the EPF is seeing inflows of 80 billion ringgit per year, adding that his ministry had looked into the matter. The discussion rapidly devolved into a shouting match among the MPs, which resulted in intermittent muting of the MPs' microphones by visibly irritated Speaker Datuk Azhar Azizan Harun, who chastised their behaviour as embarrassing as the people were watching. Other points to note included Tengku Zafrul saying that the government has instructed the banks to automatically approve applications to freeze loan repayments by B40 applicants and micro-enterprises with debts below 150,000. Those from M40 seeking a freeze would have to make a self-declaration to banks but can do so without documents. The Finance Minister also confirmed that the 85.5 million allocation for the government's controversial Special Affairs Department, or JASA, will be reduced to enable an increase for other allocations, but didn't state the quantum. JASA's huge allocation had not been well received by lawmakers given its perceivement as a propaganda machine. Sime Darby's FY21 first quarter net profit improved 14.2% to 281 million, driven by the strong growth of its motor division, particularly in China. Revenue for the quarter likewise rose 14.8% to 10.88 billion from 9.48 billion previously. Its motor segment profit increased by 66.4% to 223 million during the quarter, supported by sales and government grant income, as profit from its China operations increased by 78.1%. In contrast, industrial segment profit decreased by 24.6% due to lower equipment deliveries and part sales in Australia following a fall in coal prices. Group CEO Datuk Jeffrey Salim Davidson says that while this is an encouraging start, it is mindful of the ever-present risk of a resurgence of COVID-19 that could adversely impact the global economy. For the moment, Sime Darby is cautiously optimistic that its FY21 performance will be satisfactory, noting that most of its operations are in countries that are not subject to significant movement restrictions that would curtail sales or operations. Tenaga Nasional saw its third quarter net profit drop 15.8% to just over $1 billion due to a COVID-19 pandemic-driven decline in power sales. Revenue for the quarter dropped to 11.1 billion from the 12.6 billion posted last year. However, quarter-on-quarter, the drop was cushioned somewhat by a gain in foreign exchange and the non-cash fair value gain of 143.8 million ringgit. President and CEO Datuk Sri Amir Hamzah Azizan said that the third quarter had been an improvement compared with the second, as most the industrial and commercial sectors were allowed to run at full capacity under the recovery MCO. While he admits that the national power provider is keeping an eye on the current third wave of COVID-19, at the moment TNB is expecting between a 6 and 10% drop in electricity consumption for 2020. This, however, will be buffered by TNB's earnings of its regulated revenue cap entities that are guaranteed a demand growth of 1.8 to 2% as stipulated under its incentive-based regulation. IHH Healthcare posted a strong set of results for its third quarter, with net profit improving by 31.1% to 310 million thanks to tight cost control and receipt of government grants and reliefs. This is why the numbers improved despite revenue dropping by 7.1% to 3.5 billion ringgit. Going forward, IHH says it has seen occupancy on its home markets recover to between 50 and 65% during the third quarter, about 70 to 90% pre-COVID-19 levels. In order to keep the momentum, IHH IHH says it is looking to create new revenue streams by diversifying its product offerings, even as it keeps a strict hand on costs and foreign exchange management. In a statement, MD and CEO Dr. Kelvin Loh Chi Kuan said IHH is taking decisive action to ensure resilience, with moves like divesting its stake in India's Apollo Gleneagles Hospital, which frees up capital. He adds that its geographical footprint allows the healthcare provider diversification as some of its markets recover and others grapple with a new wave of COVID-19 infections. Heineken Malaysia saw a better third quarter as it turned in a net profit of 61.25 million as compared with a net loss of 18.19 million in the second quarter following the easing of movement restrictions. However, on a year-on-year basis, net profit was 40.7% lower, while revenue dropped 21.4% to 473.8 million. Overall, beer volume declined as pubs and entertainment outlets remained closed and consumers shifted towards in-home consumption. On its prospects, the brewer remains cautious, with MD Roland Bala saying that the implementation of the conditional MCO has impacted recovery efforts. Thus, the group will continue to proactively right-size its cost base to adapt to the new market realities, reinvest in profitable growth and strengthen its bottom line.